Assalamualaikum. This is the online class for Chapter 3 materials. Before we begin our class, please make sure that in front of you, you are prepared for this class by having your textbook and your past year in front of you so that we can have the materials and all the references as we go along. So these are the presentation outlines for Chapter 3. We will start off with purchasing procedures, the storekeeping, followed by the material or stock control system, issuance of materials and stock valuation, the stock taking processes, and purchasing method. We begin Chapter 3 by going to the first subsection, which is purchasing procedure. This is the summary or the brief explanation of purchasing procedure. The detailed explanation can be read on page 59 of your textbooks, which you can read at the end of the online class. The flow of purchasing procedure begins by departments requiring the materials that they needed to conduct the activities. For example, let's say this is the production departments requiring material A to commence with their productions. To replenish the material A, the production department manager will have to fill in material requisition form to be sent to store department so that they can get the material A that they needed. So the storekeeper will check in their store department and see whether material A is available or not. And if material A is available in store, then the storekeeper will issue the material A and give back to production department. But let's say the material A is unavailable or has completely used up. So the storekeeper will need to fill in purchase requisition form to be sent to purchasing department. So purchase requisition form is the intent, is the documentation intent to purchase that purchasing department receive, and then they would know that storekeeper says that material A is already unavailable in the store. So once purchasing department receive purchase requisition form, they will start issuing purchase order and send the purchase order to the vendors. So purchase order is the intent to purchase. It's an intent to purchase. So when purchasing department issue purchase order to vendor, the vendor will prepare the product as needed and they will deliver the product to the receiving department together with the goods delivery notes or order. So goods delivery notes and order is the summary of the product that the vendor sent to the receiving department. And the receiving department will send the goods, will check the product, whether the product is of good condition, whether there's no error, and then they will issue the good receipt note together with the inspection note, together with the goods that they have received from the vendor, back to purchasing departments. So purchasing department will check the purchase order against the good receipt note and they will see that what they have ordered is exactly what they have received. And once the checking is complete, meaning that what they ordered is tally with what they have received, purchasing department will send the signed invoice to the account department to signal the account department that they can start making payment to the vendors. So purchasing department will send signed invoice together with the signed invoice to the account department, and then account department will facilitate payment to the vendors. So this is how purchasing procedure is made, and these are the documentation that you need to be made aware of, and you need to know from whom from whom the form is being issued and to whom the form is being issued. For example, like material requisition form is being issued by production department to the store departments, and purchase requisition form is being issued by store department to purchasing departments. Purchase order is being issued by purchasing department to the vendors. The next subsection in chapter 3 is the storekeeping. So storekeeping activity refers to purchasing, issuing, protecting, storing, recording of material movement. So we focus storekeeping on for the store department from the previous slides. So what are the functions of storekeeping? Is to avoid over and understocking, to maintain systematic recordings of material movement, to protect stocks against theft, damage or obsolescence, to minimize the cost of ordering and storing the materials. So there are other functions of storekeeping that you can read in your textbook. And then we have two types of storekeeping. We can either, we as in the business or as in the company can either choose to have a centralized storekeeping, or the company can choose to have decentralized storekeeping. So for a centralized storekeeping, it means that in one company there is only one store that maintains material used by all departments and all branches. As opposed to decentralized storekeeping, there are many stores that may serve one department or one branch. So each department and branch have their own store. Please read through the advantages and disadvantages on page 73 in your textbook. The next subsection in chapter 3 is the material and the stock control system. Okay. So what is the objective of having a stock control system? One is to avoid under and overstocking. Understocking meaning that the storekeeper do not maintain the stock, that when department requests for that particular material, for example like material A that we have discussed just now, the storekeeper find out that material A is already used up. So while waiting for the material to be replenished, production department cannot commence with their productions. So and then it will disrupt the production process. Overstocking is referring to the stock being overstocked, being over-purchased. For example, let's say we have a lot of material A in store that not according to the usage of the production department. So this excess stock may subject to damage, obsolescence, and maybe also theft. So there are 4 ways for us to control our system, our stock system. One is to calculate the reorder point. The next one is to calculate the minimum stock level, the maximum stock level, and also to calculate the economic order quantity. So we begin our discussion with reorder point level. So what is reorder point? Reorder point is the level of stock where it needs to be replenished. So it means that let's say we calculate reorder point to be at 2,000 units. So when stock falls down to the level of 2,000 units, it will facilitate the storekeeper to begin purchasing or replenishing stock A. So how do we calculate ROP, reorder point? Is by multiplying maximum usage with the maximum lead time. The next one is the economic order quantity. So what is economic order quantity? It is the optimal order size per order, which we will discuss later on. What is minimum stock level? Minimum stock level is the minimum level allowed after taking into account lead time. So what is lead time? Lead time is the period of time that storekeeper need to replenish back the stock. Let's say that to replenish material A, storekeeper will need to have at least 3 days for the stock A to be replenished. Yeah? Or in other words, lead time is from the time storekeeper pick up the phone and order the product until the day that the stock arrived in the company. So that was meant by lead time. So how do we calculate minimum stock level? So this is the formula. Minimum stock level equals to reorder point minus the average usage times with the average lead time. The next one we need to calculate is this minimum stock level. So minimum stock level is the maximum level allowed before overstocking happens. So maximum level is calculated by reorder point plus EOQ or order size according to whichever applicable to the question minus minimum usage times with the minimum lead time. So we will look at past years and see how these methods or techniques are being calculated. So please have your text past year in front of you. So we will go first to June 2018, question number 2B. So while you open the question, please pause this video and then play it back after you have opened to that questions. Okay, so the questions is ABC Sdn Bhd is a large retailers which maintain a central warehouse to supply industrial tools to several shops in Batang Padang area. The following information is available for one of the tools, namely part number MS48 in the warehouse. And then they proceed to give you the additional information in order for you to calculate the needed calculations. So the question says, based on the above data, calculate reorder point or reorder level of stock. So the formula just now is maximum usage done with the maximum lead time. We take the maximum usage here, which is the 500 per days, times with the maximum lead time, which is the 14 days. So the reorder point is 7,000 units. So it means that when product name number MS48 falls to 7,000 units in their store, the storekeeper needs to start replenishing MS48. The second one is the question asks you to calculate the maximum level of stock. So the formula for the maximum level of stock is ROP plus EOQ or reorder quantity minus the minimum usage times with the minimum lead time. So put in the figure that you've calculated previously, which is the 7,000 units, plus with the reorder quantity 7,300 units minus the minimum usage 160 days units per days times with the 10 days, the minimum lead time, and then you should get 12,700 units. So the maximum level of stock for material MS48 is at most should only be 12,700 units. Any more than that, then you have exceeded the maximum level of stock. Next question is asking you to calculate the minimum level of stock. So we calculate minimum level of stock by ROP minus the average usage times with the average lead time. So you put in the ROP that you've calculated previously plus with the average usage which has already been given to you in the question, but sometimes the question doesn't give you the average usage, so you need to calculate on your own by adding the minimum with the maximum divided by 2. But if the question has already given you the average usage, then simply use the figure given to you times with the average lead time. So minimum lead time plus with the maximum lead time, you divide by 2, and then you should get minimum level of stock to be only at 4,000. So the 4,000 is the minimum level of stock, or sometimes it's also called as safety stock, or sometimes it's also called as a minimum stock requirement. Lastly, the question asks you to calculate the average level of stock. So average level of stock is calculated by dividing the total or maximum level of stock and minimum level of stock by 2. So we have calculated previously maximum to be at 12,700 and the minimum to be at 4,000. So we divide by 2. So the average stock is 8,350. Then we go to the economic order quantity. So economic order quantity, we have two methods of calculating the EOQ. So to recap, EOQ is the size of order per order. So your answer should be in units. So the first method that you can use is using the FORMULAIC method by using these formulas given to you. So EOQ equal to the square root of 2 times annual demand times with the cost of ordering divided by cost of holding stock. Okay, so to make it clearer, let's go to a question. We go to June 2019, question number 2B. So again, please go through your past year, look for the questions. Lalilo Sdn Bhd is selling a beautiful lace, namely Nana lace. Budgeted average demand for material Nana lace is 400 meters per week, and production is maintained for 52 weeks per year. The order cost is 200 per order, meaning that every time the company wants to order Nana lace from their supplier, it will cost the company 200 ringgit per order or per trip. The standard material cost for Nana lace is 10 ringgit per meter, and holding cost per year is 25% of the said cost. So holding cost is where the company is the cost that the company has to incur when they want to store Nana lace in their warehouse. The maximum usage is in any 1 week is 600 meters, and the minimum is 400 meters. On average, the order takes anything from 1 to 3 weeks to be delivered after they have been placed. So the question asks you to calculate the economic order quantity for material Nana lace. So first of all, you need to identify what is the annual demand. Okay, so the first paragraph says that the average demand for material Nana lace is 500 meters per week, and the production for 1 year is 52 weeks. Therefore, for 1 year, we can get the annual demand. Okay, so we put in the figure accordingly. 2 times annual demand times with the ordering cost, 200 ringgit per order. We divide by the holding cost per unit. Okay, so if the standard material cost is 10 ringgit per meter, the holding cost charged or incur is 25% of the said cost. Therefore, to hold 1 meter of Nana lace, the company will have to incur 2 ringgit and 50 cents. Okay, so you calculate accordingly. The EOQ is 2040 meters. So it means that every time the company wants to order their product, every time the company wants to order Nana lace, the size of order must be 2040, because that is the size that will give the company the lowest inventory cost. Okay, next we go to the example of how to calculate EOQ using the tabulated method. So the question that we're going to refer is on December 2018, question number 2B. Okay, the question read, Bosses Sdn Bhd is a manufacturing company that produces a product called BOS. In order to produce 1 unit of BOS, it requires 0.15 kg of raw material A9. So currently A9 is purchased in batches of 400 kilograms every month due to the constant annual production demand. Hakim, a new cost accountant, was hired by Bosses Sdn Bhd early this year. He advised the management to review the purchasing policy by suggesting the use of economic order quantity technique to order the raw material. So the question gives you the additional information that you can use to calculate the EOQ using the tabulation method. They give you this is the cost of holding the stock. There are two costs here that you need to consider, the cost of holding stock. One is the insurance on stock material, which is 70 cents per kilogram. And the second types of holding cost is the handling cost, which is 30 cents per kilogram. The next two items under here, these are the costs for ordering costs. Yeah? So if you want to order A9, for every time you want to order, you will have to incur a total of 90 ringgit per order. So the question asks you to identify the EOQ using tabulation method for order size 500, 1000, 1500 and 3000 kilograms. It means that what is the total cost if the company order 500 per order? Or what is the total cost if the company order 1000 per order? What's the total cost if the company order 1500 kilogram per order? So for the tabulation method, I would suggest you to follow my format for a simpler and more understanding format as opposed to the textbooks. Okay, but first thing first, you need to calculate first the annual demand. Okay, whatever it is, in order for you to calculate EOQ, identify first your annual demand, and it must be the material, not the product. It means that it must be material A9, not product boss. Okay, so the annual demand for A9 is 500 kilogram per month times with the 12 months. So how do I know it's a 500 kilogram per month? The question says that constant demand of 500 kilogram per month. So the annual demand here is 6,000 kilogram. And the holding cost per unit, you just simply add the two individual costs. You should get 1 ringgit per unit. And the ordering cost is the 90 ringgit per order. So you need to calculate total ordering cost. We need to calculate total holding cost so that we can get the total cost. Total cost is total ordering cost plus with total holding cost. So to calculate total ordering cost, you need to know first how many order we made in 1 year. Yeah, how many times we order from our supplier. So if our order size per order is 500 units and 1 year will require 6,000 kilogram, so we need to order 12 times per year. Yeah? So if our order size is 1,000, so we only need to order 6 times per year. So you can say the bigger is the size order, the lesser I need to order from my suppliers. Okay, so if I order 3,000 per order, so I only need to order 2 times a year. So for each ordering, every time I order, I have to pay 90 ringgit. So if I order 12 times per year, times with the 90 ringgit, I need to pay a total of 1,080 ringgit of ordering cost if my order size is 500 units. Okay, so if I order 6 times a year, so I only need to pay a total of 550 ringgit, 90 times with the 6 times. The same goes for the order size of 1,500. I only need to pay 360 ringgit, 4 times with 90 ringgit. And if I order 2 times a year, I only need to pay 180 ringgit. For the holding cost, okay, if I want to hold 1 unit or 1 kilogram of A9, I need to pay 1 ringgit per kilogram. So I need to know how many I hold at a certain point of time in my warehouse. So it's difficult for us to really get the specific number of stock that we held every year. So what we can do is we can make an estimation by calculating the average stock. So let's say I order 500 units. So the average stock will only be 250. 500 divided by 2. 500, 750 kilogram and 1,500. So I can calculate the holding cost by 250 kilogram times with the 1 ringgit. So my total holding cost is 250 ringgit. Therefore, total cost, if I order 500 kilogram per order, is you add these two up, 1080 ringgit plus 250 ringgit. The total cost here is 1330 ringgit. So on and so forth. Okay, so these are the total costs for 500, total cost for 1000 kilogram per order, total cost for 1500 kilogram per order, and total cost for 3000 kilogram per order. So you choose the one with the lowest cost. So here we can see that the lowest cost is when the company order 1000 kilogram per order. So choose the order size that incurs the lowest cost. In this case, the order size with the lowest cost is 1000 kilogram per order. It means the EOQ is 1000 kilogram with a total cost of 1040 ringgit. Okay, so we have finished the stock valuation. So we have finished the stock control system. Next, we go to the issuance of materials and stock valuation. So whenever that a storekeeper issue, the word issue here means they take out the stock from their store and give to the departments. Okay, let's say production department just now, for example, our example just now, production department wants to have material A in their production. So when production department issue material requisition form, storekeeper will issue material A to to production department. That's what it meant by issue. So when material are issued, production of stock must be valued or priced. Yeah, whenever the companies, let's say storekeeper issue 2000 units of material A, so it must come with the price or the value in terms of ringgit. So the valuation is important because it will affect the cost of product. So the value of stock is the one that we use to calculate cost of sales in your income statement. So there are three methods in pricing the stock. One is the first in first out method. The second one is last in first out method. The third one is the average method. So we go first to first in first out. So this method means that all the stock will be used first. The stock that goes in first are the stock that will go out first. Okay? They will use all the stock first. Then they start using newer stock. So this method will lead to lower stock value, lower production cost, lower cost of sales, and higher profit in the case of inflation. Inflation means that the price of stock is increasing. Okay, the second method is last in first out. It means newer stock will be used first. So whenever storekeeper wants to issue material to the production department, they will use the newer stock, not the older stock. That's what it meant by last in first out. So this method leads to higher value of stock, higher production cost, higher cost of sales, and lower profit in the case of inflations. But in terms of average method, everything will be valued on average and the issuance price will be recalculated after each receipt, taking into account both quantity and the money value. So you're going to see in your past years that most of the question, if not all of the question, will only focus on the first two methods, which are the first in first out FIFO and the last in first out the LIFO. I've yet to see any past year that focus on the average method. So let's go to the example of a last in first out method. So this is on June 2019, question number 2C. Okay, so they give you the question, pasarkan mundur Sedia Berhad manufactures a single product and maintains its stock using perpetual inventory control system. One of the components used is PK100. It uses LIFO method for stock valuation. So on 1st January 2019, the company has stock of 500 units, of which 300 units were purchased at a value of 15.50 per unit, purchased on the 10th December 2018. The balance of the opening stock is valued at 16 ringgit per unit, purchased on the 28th December 2018. So you have to remember that this sentence focus on the opening stock. So we want to prepare the store ledger card for the month of January, and this opening stock were purchased on December last month. Okay, so we need to know which stock is older and which stock is newer. So in this case, 300 units here, 300 unit of opening stock is considered to be older stock, and the balance, which means 200, 500 minus 300, 200 units of stock are considered to be the newer stock because it was purchased on the 28th December. Physical stock count carried out on 31st January find out to have 570 units of PK, 100 in balance. This is the closing stock which we will include at the end of our store ledger card. So they give you the activity that the storekeeper has made during the year. So on the January 10, the storekeeper purchased. On January 18, the storekeeper issue. Issue means they take out the stock from the store and give to the purchasing department. And give to the production department. January 25th, yeah, they issued, and then January 28th they purchased. Yeah, the storekeeper purchased another 300 units at 60 ringgit per unit. So they ask you to prepare the store ledger card for the month of January using the FIFO method. Using the LIFO method. So this is the suggested answer for the previous questions. So before you can start answering, please make sure the format for your store ledger card are complete or are correct. Please make sure you have the column date and column for receipts, column for the issues, and column for the balance. Receipt here refer to whenever the storekeeper made a purchase. Issue is referring to whenever the storekeeper take out stock from their store to give out to the production departments. And under each of the column, please make sure you have separated the column further into 3 more columns, which are the quantity, cost per unit, and ringgit. Okay, first of all, please start your calculation by putting in the opening stock. Okay, so this is what I'm talking about. That their opening stock, the company has two types of stock in their opening. The 300 unit which was purchased on the earlier date, and the 200 units which was purchased on the later date, on the 28th of December, if I'm not mistaken. Okay, so please put first old stock followed by newer stock. Okay, do not mix up your store ledger card. It must be older and then newer stock, and then put in the cost per unit accordingly. Yeah, 50 cents, 16 ringgit. So you should get the total by multiplying the two items here. So you should get 46503200. So on the January 10th, on the previous question says that no, January 10th, the storekeeper purchased 150 units of material which was cost at 50 ringgit. So if the storekeeper purchased, then the stock value will increase. Okay, so the balance here should be old stock, newer stock, newest stock. So the newest stock here put at the end of the row. So and then you calculate accordingly. So on the January 18th, storekeeper issue 200 units of stock. Okay, storekeeper wants to issue 200 units of stock. So how do we value the issuance of stock? So you are using last in first out. Please remember that you are using last in first out. So take the most recent stock and then you put in at the beginning of the row, followed by the second recent stock. So since you storekeeper issued 200, you can take the whole 150, put it here, and you take 50 units from the 200 into here, and then you take the cost per unit accordingly. Okay, so the balance here is the 300 that you haven't touched yet, and the 150 unit, which is 200 minus 50, you should get 150 units. Okay, and on January 25th, the storekeeper issue another 150 units. So take the most recent one, which is the 150 unit here. You take out and you value at 60 ringgit. So now the balance in the store is only 300 units, which is the older stock. Okay, and on January 28th, the storekeeper replenished the stock by making purchases. So you put in 300. This is a newer stock. Put it at the end of the row. Time with 60 ringgit, and you get the balance. And lastly, there's a stock take happenings here, and the auditor or whoever make the stock take found that the value, the number of stock is only 570 units. But according to your record, you should have 600 units. But the physical count found out you only have 570 units, so you have lost 30 units. So we register that to be as stock loss. Put that 30 unit under the issues column. Okay, what's the value to be taken here? Since it's last in first out, take the most recent stock here. So put here 60 ringgit. So the balance is as such. Okay. For the example for first in first out, you can go to December 2018, question number 2C. Okay, Floras Neighborhood is a manufacturing company that produces a high-grade organic flour for domestic market. One of the materials used is wheat starch. On 1st December 2018, the business had wheat starch stock of 400 kg, value at 3,200, which was bought in 19 November 2018, and 200 kg at 18,000 ringgit. Purchased on 28 November 2018. So these are the information for the opening stock. For the opening stock. And then they give you the transaction, the list of transaction or the list of activity that the storekeeper has made during the year, during the month. And then they give you the additional information, the return material for production on the 27th here was due to surplus or material in production process. It means that the the production department has returned 30 kg of material back to the store. Yeah, the production department return back the 30 kg back into the store. So when you want to record this, please record under the receipt column. And then the physical stock count on the 30th of November will reveal no stock discrepancies. Okay, so they ask you to prepare the store ledger card using first in, first out method. Okay, so this is the answer for first in, first out method. The format of the answer is the same. And then as usual, we begin our calculation with the opening stock. You put in opening stock first. Okay, you put in the older stock, followed by newer stock here. Older stock and then newer stock. It says there that the total is 3,200, total is 1,800. So you can divide by 400. You should get your cost per unit accordingly. You can calculate this on your own. Okay, we followed by December 6, in which the storekeeper issued 300 units of 300 kg of wheat starch to the production department. Okay, since you are using first in, first out method, take the older stock first, then you use the newer stock. So in this case, you want to use 300 kg. Take 300 kg out of 400, not from the 200, out of 400. So now the balance leave only 100 of the older stock and 200 of the newer stock. So December 12, the storekeeper purchased additional wheat starch of 200 kg at 10 ringgit per kilogram. So you put in accordingly old stock 100, 100 here, 200, and then new stock here, put here. Okay. And on December 19, the storekeeper further made a purchase of 200 kg of wheat starch at 11 ringgit per kilogram. Again, you can add on the stock old stock, newer stock, newer stock, newer stock here. You see here? Okay. And then followed by December 25th, in which the storekeeper issue 440 kilogram of store. Sorry, 440 kilogram of wheat starch. Okay, so you take in the older stock first, 100 here. The next older stock, 200 here, and take 140 out of 200. So you leave 60 kilogram from the 200, and then the 200 of the newer stock is the balance. Okay, on December 27, the production department returned back the stock to the store. So you put under the receipt column 30 kilogram, okay, at 10 ringgit. So you add on with the older stock, 60 plus 30, you get 90, 10 ringgit here, 200 remain as it is. And since there is no discrepancy when they did a physical stock take, so you can see closing stock is 290. 290 plus 200, and the total cost is 3,100. So whenever that you want to read through the question, sometimes the question doesn't really clearly say which method to be used. But if you look at the first two questions that we discussed just now, we can clearly see that the question asks you to use LIFO method, the question asks you to use the FIFO method. But sometimes the question can be a little bit tricky, in which they say that choose the method that will yield the highest profit, or choose the method that will give the company the lowest cost of sales. So you may not be able to know which method that give you high profit or low cost of sales. Okay, so this is the summary of which method that give you high profit or low profit. So for the first in first out method, if the market is inflation, meaning that the price cost per unit for the material is increasing, which you can see on the previous two questions, the cost of wheat starch, for example, has increased from 8 ringgit to 9 ringgit to 10 ringgit to 11 ringgit. So this indicates the market is experiencing inflation. So if the market is inflation, under the first in first out method, you can be sure that the closing stock will be at the highest. Cost of goods sold will be the lowest, and thus profit will be the highest. As opposed, if the market is experiencing deflation, meaning that the price of material is decreasing, or the price of material is getting cheaper and cheaper, under the first in first out method, you just go on the opposite sides, lowest, highest, and lowest. Okay. The same goes for last in first out, LIFO. If inflation, you just go the opposite of the first in first out. So if first in first out, inflation is the highest under the closing stock, so last in first out during inflation will be the lowest. It will be the opposites of the FIFO. See here? And therefore cost of goods sold will be the highest, profit will be the lowest. The same goes for deflation, yeah? Highest, lowest, and highest. But for the weighted average, everything will be on the average basis. So if the question says that prepare the store ledger card that will give the company the highest profit, you look first at the price of the material. Is it increasing or not? So if it's increasing, that the company is experiencing inflation, highest profit will be on, you have to use the FIFO. But if the market is inflation and the question wants you to prepare the store ledger card using that will give the lowest profit here, so please make sure that you use last in first out. Okay, the next subtopic here will be the stock taking. Stock taking is the process in which we hire a third party, either an auditor or we hire an independent staff to calculate the closing stock of our material in the warehouse. So we have two ways to stock take our product. stock take our material or our stock, we can adopt the continuous stock taking, or we can adopt the periodic stock taking. So continuous stock taking is a less destructive procedure, as some company may hire full-time inventory staff to continuously check in the inventory based on the schedule. So the process of stock taking, the process of calculating the stock doesn't take once a year. It can be done on a continuous manner, maybe every week or every month or every 3 months. Yeah, they have certain schedule that they have to follow. Stock are checked and counted physically by independent personnel. Only a sample of stock are randomly chosen and counted. Because the process is continuous and more than once a year is being done, so if you want to calculate the whole stock, it will be impossible and not very cost effective. So under the continuous stock taking, the independent inventory staff will only take a sample of stock to calculate or to count the number of physical stock. Okay, as opposed to continuous, we have periodic stock taking. This is the process where entire inventory is verified at a given date by an actual count of materials on hand. So this is where at the end of the accounting period, an auditor will come to the company's warehouse and they do an actual count of material, the whole inventory stuff. Okay, so the data is taken at the end of the accounting period. Any discrepancy of stock should be recounted and be reported to management. So under periodic stock taking, this is where we get our closing stock. Lastly, under chapter 3 is the purchasing method. So purchasing method is an entirely theory subsection. So I would urge you to read on your own in your textbook. Okay, but I give you the basic summary of it. So traditional method are the one that we have learned just now, in which we calculate the minimum level of stock, maximum level of stock, we calculate the reorder point and the EOQ. So those are what we call as traditional method. Okay, but however, traditional method has the disadvantages of high cost of ordering and handling the material. Yeah, sometimes it's very costly for a company to manage their stock if they adopt the traditional method. So, but on the other hand, there are another method that we can use, which is the just-in-time method. Okay, but instead of having a safety stock or a minimum level of stock, GIT says we only purchase when we need the product. We only purchase when we need the product. So in order for us to purchase when it is needed, you need to have a good relationship with your suppliers. It means that fewer suppliers are used, purchases are made in small lot of sizes, yeah. No inspection, we don't want to waste our time at the inspection at the receiving department, so we have to trust our supplier to give us product at the best quality at the correct amount and types that we want to purchase. And the material purchase on demand or as scheduled. Okay, so the GIT aims is to eliminate wastage for manufacturing, reducing stock to zero. We don't want to maintain any holding costs. We want to have zero stock. Achieving continuous flow of production, meaning that when production department wants that material, supplier will immediately send the product. Continuous flow of production. And minimizing non-value added activity. What are the non-value added activity that is being stated here? For example, inspection cost. Inspection activity is a non-value added activity. Holding cost is a non-value added activity. So we would like to eliminate those non-value added activities. So the rest of the characteristic, please read from your textbook. So that will be the end of chapter 3 materials. Any question or any subsequent questions, you can either WhatsApp me or we can discuss in the Google Classroom so that everybody can benefit from your question. So I end my lecture with wabillahi taufiq wa hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Any mistake is for my own, and good luck.